Hi, this is JP Newman of Investing on Purpose. I am so lucky to be with my buddy Ryan today, and we're going to have a great conversation, really giving you investment strategies. You know, the market's changing right now. What used to look like easy money may not be such easy money. So we're going to dive in and tell you some topics of literally kind of going around betting on the jockey, meaning who is the person you're investing with and what are the 10 or 15 questions that most people don't ask. They feel good, but they don't ask the questions. And we're going to give you the questions that you really should be asking that I think will significantly improve your chances of having a great outcome with your portfolio. So whether you're starting on your first investment, whether it's $10,000 in your first house, or you're a sophisticated investor, I think you're really going to enjoy this episode.
JP, hey man.
Good to see you, Ryan.
We're recording this at the end of 2022.
Yes.
And 2023, for me anyway, feels like the first year actually post-COVID.
Yeah.
It feels like the beginning of the next chapter, right? I mean, the world's fully opened up. The economy has gone through its boom and then its bust.
Yeah.
And it's
not a bust yet. We'll call it, it's a reset right now.
Well, compared to the highs,
that's true.
Right? I mean, we've come down quite a bit from
the
highs of things.
Yeah.
We're over this crazy run up that we were seeing. Things are softening. They might soften further, but to me, it feels like if you look at the world more linear, if you take out the big spike and the crash, we're about where we should be. Like if you had imagined that 2019 had just continued how it was going to continue, we would have to have a softening around this time. We'd probably still be talking about a recession.
You don't think your house should double every 2 years? You don't think that's right? Used cars should cost more than they cost new. You don't think that's normal?
So if you take those big spikes out, the big run up and the big run down, you know, it makes sense that we're kind of where we would have been had there never been COVID.
Right.
So like we're through the craziness of it. And the beginning of 2023 seems to me like the start of like, all right, no more of these crazy manipulated economies. And a lot has changed in that time, but the people who are coming out on the other side of it have earned their licks. Oh, yeah, right. And they've got their battle scars. And I've seen you get more involved on, I don't know if you call it the speaker circuit, but you're getting more plugged into spreading your message and what you believe in, and you're speaking at places. And I know you're seeing a lot of pitches and a lot of good ones and bad ones. And I'm just curious what you're seeing coming into the next chapter.
Yeah, you know, I always say, right, we've had this, that in good markets, people are irrationally exuberant, and in bad markets, people are irrationally fearful. And so there's obviously a lot of fear starting, because when there's a reset, there's the unknown, right? But then a lot of the entrepreneurs that I'm seeing in these expert panels, they want me to come in to talk about the real estate reset, multifamily, and what it's going to look like. And I think what you're hearing more and more is that the people who have been through a cycle before, and I've been through a downturn before, are just getting prepared. It almost becomes like a playbook of what needs to be done. It's like less fear. And actually, most people make their money right about now, right when things look like don't do anything, head for the hills, put your head in the sand, is one of the best times that you can actually build your business. Or in real estate, it's one of the best times of the cycle as things actually adjust down. Like, you don't usually make your money when things are in hyper, kind of what do they call hyper growth. It's this cycle right now.
But is that because it's during right now that you're planting the seeds that are blossoming during those big growth periods?
Exactly. Like, this is not the moment, because the market's still resetting. Equities, all equities, stocks, oil, real estate, it's all resetting right now. But what does everyone say? God, I could have gotten that deal for so cheap. Well, no, you couldn't have. You didn't have the capital. You didn't have the business plan. You weren't really prepared. So yeah, when you say, oh, I missed that one, you missed it because you weren't prepared. Like, I can tell you here at Thrive right now, I am, for the first time in years, I'm going on panels. We're raising money again. And because this isn't the moment that I actually need money, but I will soon as the markets reset, and you cannot wait to have that dry powder to be able to participate in those cycles.
Yeah. So what do you see, or what do you think about coming into this next chapter?
For me personally, or for the business as far as advice? Because there's two different directions, I would say.
Well, take me both ways.
Well, you know, Ryan, it's interesting when you have been through a down cycle already. For a lot of people, it's fearful or they don't know. For me, I'm like, I don't know why I have so much energy, Ryan. I'm like, hell yeah, I know exactly what to do right now. So I'm going back to my playbook that I know will work because you're kind of betting on the energies and kind of how these cycles work. So right now, my short-term business plan that I've done before is I'm focusing on doing lending right now. I have two businesses. I invest in apartments and equity, and I lend money on real estate, and that's called debt. So debt and equity, and they're always countercyclical. So right now, it's don't buy things until prices reset, right? Like don't rush. But you can lend money because right now what also happens is the banks get fearful and the banks stop lending money. So now all of a sudden the quality of the loans that I'm seeing are very bankable. The bank should be doing them, but they're not. So my playbook is very simple. Stay on the sidelines while price readjust and do with my network of friends and the banks just getting fearful. It creates a great opportunity for me to bring in investors and have something worthy to put them in while we wait for prices to reset.
So this is what I heard while you're saying that. JP's done this before.
Yeah,
that is all I heard.
That's right. This. Like it's actually really exciting for me. I'm like, yeah, I know this.
So during the crazy run-ups, what we had was every opportunity was working. Yeah. You know, when money was free, everything was working.
Yeah.
And so I think as investors, we got lazy about really vetting the person behind the deal. And instead we were looking at the ideas and we were looking at the returns and we were looking at the market and we were looking at the product, and we ignored the track record and the team behind the person who was doing the deal.
Well, I think you're exactly right, Ron. I think, and I'm starting to see it, I don't know if you are, but I'm actually seeing, they always say, you know, when the economy's good, the ocean's high, you don't get to see it's like when the tide goes down, you really get to see what the investment was like. Like, remember that the first day you invest, I always say, is like your first date with a person. Like, it's all great. You're excited. You wouldn't have put money in unless you thought you were going to make a return. And so you're excited about making that return. But what you're talking about is the fundamentals, right? Which we were talking about, betting on the jockey. And I think so much of these times, especially in go-go times, you're betting on the new hip idea and you're moving so fast and you have FOMO. Yeah. Like, what if I don't get in and all my friends got in? Quite frankly, you're in a deal, Ryan, that I had a lot of FOMO about. And I was like kicking myself, but I didn't get there on time. And then I got pressured by the team, the internal team, to do it. And quite frankly, as much as I wanted to do the deal, it was an online deal with a brand. And as much as I wanted to do the deal, when I got the email that came to me from the team was really off-putting. It was like, it was pressure, like, do it now or it's going to be gone forever. And that's one of the lessons, like, when you talk about what is it like to bet on a jockey or to bet on a team, what are the things to look for on a good team that really should almost be more important than the investment? Look at the team. Mm-hmm. And then things that you should say, I'm out. And I'm even learning right now, because I've been going to a lot of these panels with masterminds. And as I'm listening to the Tom Wheelwrights and all these experts in the fields, I keep hearing the same thing. It's the jockey that matters first in his team, their track record, and then the deal, as opposed to the deal first and the team second. And I'm really seeing that right now.
When you mentioned this deal that I'm in the FOMO on, is this the deal that will not be named?
Yes.
Okay, great. So
I really want you don't understand. Like, I actually reached out to them. It made total sense to me. I read the entire offer. I spent hours and hours, and it makes total sense. Like, if you and I were to sit there, it's very exciting on paper.
So let's talk about this deal without talking about this deal, because I don't know what I'm allowed to say right now. So there's this deal. I am in it completely for the jockey. Here is where it's a little bit different. Is the jockey just started riding a horse he's never ridden before.
Yeah.
So I'm betting on this jockey, and from my observation, one of the deals that this jockey pursued is way outside of his skill set, and he's gone dark. Yeah. He's gone cold. He's not returning phone calls. Right. Now it's early in this process. We could say that he's scared. We could say he's not allowed to say things because of legal issues, but the way he's just been handling it has been really poor.
Yeah.
And it has helped me to see a fuller version of what it actually means to bet on the jockey.
Yeah.
Because this person has an incredible track record and is somebody that I want to work with and that I believe in completely, but they're in an area where they don't have experience. They have experience in complementary industries, but this deal was a little bit of a unique one. And it's helped me see that betting on the jockey is really about, has this jockey ridden a scarred up sick horse before? Yeah. It's not just the jockey that can make the horse go the fastest. It's the jockey that has been through highs and lows and wins and losses and doesn't have a perfect track record.
Yeah.
And someone like you in the real estate space, you're very public about the fact that you've taken your licks.
Yeah.
And so if you invest in a deal and it goes south, you know what to do.
Yeah.
You may not win the race or have the fastest horse, but you know how to get that sick horse to the finish line.
Well, it's interesting, Ryan, as I've been, call it this post-COVID, and everybody, all of a sudden I'm getting a lot of invitations to speak. And again, it's been a big rest for me. But at this point, at the course of my business, I'm being introduced now as the expert. And that's a lot of pressure when you're being introduced as the expert, to your point, because I can see if you don't vet someone out, it almost makes me uncomfortable on stage a little bit. Like, as relaxed as I am and comfortable with what I do, when you call someone an expert, which is the expert jockey, it's great. But it almost makes me want to, like, literally on stage first say, I'm the expert, and most win, but some lose. Are you ready for that? One of the things, Ryan, that I've had to come with, because it's been so nice getting on stage and again getting these compliments, but I noticed that there was some resistance even last week. I'm like, what is this resistance? Because I don't usually get nervous on stage. I'm like, there's something going on here. And I realized what was kind of going on in the background is, yes, I really have earned that title, and I made investments in the senior space that you and I have talked about that are not going particularly well. And the lesson when I've really had to think about that is, I can tell you it's COVID, and it is, like, COVID has affected it. But I also realized that having a specialty, not just being a good jockey, but a jockey who specializes, and you were talking about this with the investment, like, I straight away, my core is workforce housing. When we talk about workforce housing and the residents, you hear me spaz out and get all excited and passionate. So when I got into senior, it was an absolute spreadsheet decision. There really was no why. There was no impact. It was, apartments are getting expensive. This area, this sector is less expensive. Let me explore this area with a couple other facts. Now, the facts on paper, Ryan, were completely compelling. The only thing I missed was I didn't have passion for it.
Interesting.
And I didn't know it when I invested in it 5 years ago.
You didn't know that you didn't have passion for it.
So part of a jockey is my point, Ryan. Like, even for me, it's like, Adrian and I have committed, and I keep hearing this, to specialize in what you're really good at, and don't try to spread yourself. I even see some other people, they just try to do too many things. You almost get cocky. Oh, I'm making a lot of money.
Yeah.
So you're so good, you start doing a lot of things. And I think that's the story you were saying. But one of the lessons that I've learned from this experience in the senior center is, I'm going to stick to apartments and lending money. I've had tremendous success in those areas, but it feels good even just to say it to you. I don't know why. It almost feels like a confessional to me.
Well, but what's so refreshing about what you're saying is there are a lot of people in your space who are very eager to be labeled as the expert.
Right.
They're very eager to be up there, having someone introduce them as the expert.
Right.
And the fact that you are resistant to that title is probably a good indicator that you are indeed an expert. Maybe, right? Yeah. Because there is a healthy respect for what an expert is, and an expert is not someone who gets it right all of the time.
Right.
And so I think that's really a good sign. I wouldn't call myself an expert. I don't get it all right.
It feels good, because I feel like if someone understands that, yes, they've got the right team, the right person who's got a track record, who's specialized, and they've had some, like, not only have they had some mistakes, what they learn, it'd be a great question if you're looking to invest in something, and getting the full thing is like, what did you do, or what did you learn when something went wrong? I had it yesterday. Yeah. I was asked to invest in an oil and gas fund, and it looks really good, like 20 years experience, seems like a great team, came to me from a great source. And I reached out to just 2 or 3 partners to check up on them. And it was not a good, they had lost quite a lot of money with this group. And so I actually just honestly asked the guy in a text yesterday, Ryan. I just said, I got to be honest with you. My friends, my partners had lost quite a bit of money with you. And they went through an explanation, and I haven't made a decision. I mean, I might actually be okay with their explanation, but I wasn't going to I had to be honest with him and just up front and say, hey, look, you've had a pretty bad hickey. It wasn't a small hickey. Apparently it was a big hickey. Okay. I'm still actually wanting to have a conversation with you. It makes it harder, but I'd like to I might have more respect for the investment when I hear what happened in the email to me. yesterday. He said, we had a different strategy back then and we lost and we learned, and here's where we're going now and why this is working now. And I will have another conversation about that.
Yeah, it is really interesting to hear how much you vet a person and an investment before you make a decision.
Yeah.
Like you vet something way more than the average investor.
Yeah.
And that may be what makes you a professional investor.
I really feel like at this point, thank you, Ryan. I put, I have a little team now too who helps me with this stuff. But like, I've had 2 investments this week that I passed on, and I love investing, and it's been really following my guts like a 10. Like one founder's putting 30 million of his own money in. It's a really stable, economic, resistant business, great cash flow, all the things that I love when I'm looking that fit my style of investing. But his offering, what he told me, and the subscription documents did not match. And there was a big fact, and he kind of hinted, like there was a 1 sentence on it, but when my lawyers and my team dug into it, it was a pretty big omission that could be explained, but I passed on the deal over it because if the relationship's going to start out where it's not complete transparency and not complete fiduciary, because putting my money in without a full explanation, I think would have been irresponsible. So I passed, and it probably will be a good deal. I actually think there's a reasonable chance, but I'm really I want to stick to those principles that we're talking about betting on the jockey. And the first thing you can do, you got to be a 10 out of 10 on the team. Well, 10 out of 10.
This is what I'm imagining in my mind, JP, is when someone wants your money for a deal, they're going to be your friend and they're going to say all the right things.
Yeah.
But when things go south, that's when things are really tested.
Yeah.
And what I'm noticing about the way you think about this is you are really poking at where things have gone south or where they could go south, because it's not enough to just trust somebody on first meeting when you're excited about the deal, you're excited about transacting money, or excited about returns. You're really poking around for where things could go wrong and how that person has navigated that in the past.
Completely.
And that is how you vet the jockey. That's how you find out if the jockey has the experience. And by the way,
it's really hard, Ryan. Like, this is not easy work to do this. It really takes discipline. It'd be so much easier. And I think all of us, even with my investors, I notice it. Like, it's so much easier just to trust somebody. I mean, it feels really good. Like, it feels good. I get the story. I trust you. And that's great. It's actually not bad. You don't want to lose that instinct, because I think instinct is a big part of investing. Unfortunately, the part that I like the least, but I do a lot of now, and I hire a team. I'm at the point where I can hire a team to help me with this, but it is in those cracks. I had an investment this week that everybody, including a lot of your friends, is in. They're all excited. They say it's the best thing they've seen. I can name the list of your friends who are in this deal right now.
I can think of them.
Yeah. So I looked at it.
I know who you hung out with this week,
and
JP.
So I had my guy who's really kind of more like the CPA from Big 3 firm. He's managed, and he looked. He's like, JP, what they're saying, because he was in me when they came here they pitched me this week. He's like, it's not what the offering says. He's like, they're telling you things that just aren't true. Like, I'll give you one example. It was a fund that everyone says is the best fund they've seen, right? Great fund. It's going to do great. It's around enterprise software. And so we said, so what's the timing that we would get our money back? Simple. I hate things that take 10 years. I'm not waiting 10 years for anything. Like, show me the money, cash flow all the time. Build your cash flow. That is wealth. But that could be a whole podcast on that. So he says to me, well, you're going to get your money back in 3 to 5 years. I said, well, how do you know that? And he said, well, because once these investments pay off, we're not going to rerun them into other deals. But their offering says they can rerun them. They have the right to rerun them 3 times. Well, 3 times would be 10 to 15 years. I said, so why would you say in your offering that you have the right to take my money and keep reinvesting it with other companies when you're telling me this is going to be shorter term? And there was like 5 of those in a row that he would say things that didn't match what they were saying. And he kept saying, oh, it's just our lawyers. It's just our lawyers. But you're like, that's a lot. And I know that's the stuff I hate to talk about. It's the stuff that's like, it's the stuff that's so not fun. It's so not energy. It's so not gut. But I'm finding it as I'm investing my own money, and as I'm seeing the people who are consistently making money, it comes with that kind of discipline.
Yeah. Well, I think these last 2 years have changed in my mind what it actually means to bet on a jockey.
Yeah.
And I'm even looking at the deal that won't be named on this episode, if it would have been okay for me to wait to see how that jockey performed, and there would still be opportunities there, right? And like the fact is, when it's okay to like wait and see how JP does in this area and then go invest in the next one.
Right.
The returns might be 15% instead of 20%. But watching how a jockey performs is, I know there's something very calming about that to me, because I think a lot of us who are more focused on the entrepreneur side, who are focused on the making the money side, are so quick to deploy, so quick to get a return, that we don't pause and ask the questions that a professional investor like you would ask.
I agree.
And this is why we stay on a rat
remember,
race.
when you lose money, like, and I've lost money. And by the way, if you invest enough in enough deals, you're going to lose money. Like, they're not all going to work. Yep. And so don't beat yourself up when you lose on some of them. You just got to win on a lot more than you lose. But time and time again, I think that it's just, the team has just made such a difference. And I'm seeing it now, even like I have a lot of investments out there right now, Ryan, and some of it's comical. I've got a jockey who I think is really responsible, but he never reports. He doesn't send me reports. So he has a fund. And so last time he told me the story, and he's betting on great companies. He's in SpaceX. I mean, like, he's picked some good winners, like some good companies. It's a technology fund that I'm in, but I haven't had reports for 2 years. I have no idea. So I called him. I was like, what's going on here? And he gave me the whole story. But then I read his paperwork, and his finally, when he sent me a report, it didn't match his story again. There's a lot of inconsistencies. The size of the fund wasn't the same size he told me it was. The story was just so. What I'm finding in my own experience, Ryan, is when you find a good jockey and a good team, rinse and repeat.
So JP, we've spent a good amount of time in this episode talking about what to look out for, where things could go wrong, why we should be more careful. Yeah. Let's flip this a little bit. What do you look for? What makes a jockey stand out to you? How do you know that it's a jockey you want to bet on?
That's a great question. So what I'm finding more and more as I go through this investing in a lot of deals is, like I said, it's this balance between your gut and the right questions. So the gut is like, is this person, does this person seem to be a expertise? Do they have a track record? Do they specialize in one thing? But I'm starting to ask a new question, Ryan, too. And I think it's a really important question. As the show's about impact, I find that, when I'm on these panels, when I listen to people, everyone starts with a good story. Again, it's almost like dating. Everyone's got a great story. Getting to people's why tells me a lot about the person. Because if the person's just driven by money first, or if it's really just a business plan, or if they're really just out to make money, they're not going to tell you that. Like, no one says, I'm here to make money off of you. I'm going to leverage you as your investment to make money so that I can have a good life. Like, no one's going to say that. And a lot of people do it. And it's not bad, by the way. I mean, like, I've got investors. A lot of it comes from intention. It's just the intention of your why and your impact. So if there's, right now I have 2 companies, they're almost identical. And as far as investments, but one of them, the personal investment and the why, there's like a mission behind it that's much stronger. And it gives me a sense of character. So when we talk about character in the jockey, beyond intelligence, beyond the team, beyond do they do good reporting, all the things you can actually just ask the questions. Show me your track record. Tell me your mistakes and what you learned from your mistakes, everything we discussed. But another one is like, why are you doing this? Like, what is it about this product and service? And I love hearing the stories. And you just said this right on our break. Not the story that you tell everybody, because that's the narrative you tell on panels. Tell me you as a human being. Why are you doing this right now?
You know what I'm thinking of is I'm invested in a fund that invests in plant-based foods. Mm-hmm. And I'm not a vegan, although I have a couple children with a vegan. And so I know that space fairly well. But what strikes me about the team behind it is they have a mission, and the fund is the best structure that they know of to execute that vision.
That's beautiful.
And some people raise funds because it's the fastest way to make money, or they think it is. And that's what I'm hearing is the difference from you.
Yeah.
Right? Is you can make money a bunch of different ways. If a fund or a raise is the way to make money, that doesn't show the intent that you're looking for the jockey that you're searching to invest in.
Yeah.
But if someone has a vision and a purpose behind something, and the fund or the structure with which they're raising is the fastest or best way to execute that vision, now you're listening.
A lot of times I find, Ryan, that if someone's being authentic with you and telling you their real story, it's actually usually based a lot of times on hardship, or as Mickey says, their personal hardship. They had an illness and they came up with this wellness product because they had to, like their life depended on it. Or like even for Thrive, remember we started Thrive right when Bernie Madoff came out and was stealing millions from people. And Adrian and I said, how can we redefine the word fiduciary? Like literally it was like a hardship of the time. And we realized like a lot of people were in pain and in fear because they had been so manipulated. So like part of the intent of Thrive early on was like I hate to say the word, it was almost like, how can we be a financial healer? Because I know for me, I had been screwed before. In fact, the last thing I had done, if you remember during the Sony days, that last person ripped me one. They totally financially took advantage of me. So I knew the pain of what it was like to be totally lied to, manipulated, and what have you. And it kind of, I think a lot of the roots to Thrive were like, I know how painful that was. And I wanted to have a different kind of company that wouldn't be right all the time, but would deliver to the client that fiduciary, that respect, that transparency, everything we're talking about here.
What this conversation has done for me is it's challenged how I want to show up in my fund, because it's making me question the Ryan that started a fund 3 years ago is different than the Ryan today.
I get it. I totally get it.
You've seen and commented on my transformation.
My gosh.
I've taken some licks. I've eaten some humble pie.
Yes.
And so the Ryan today has different values than the Ryan that started that fund. And so it's making me think about, okay, did the March of 2022 Ryan, who raised a fund in the thick of COVID, what were his intentions? And it was more like I was trying to plan my next chapter, not like I had a real mission to help the end person.
Yeah.
Right. And now it's different. Like now I have my intentions are much more in finding and empowering the right entrepreneur.
Yeah.
And I'm going to have to go back and actually do some thinking about how I can change the decisions. And I'll have to call Sam, my partner, be like, I want to do a few things a little bit differently.
Yeah.
So that I just want you to know this conversation is sitting with me.
That's awesome. You know, I think in that if the lessons of us interviewing Mickey and like her creative process, or like so much of what we talk about starts with this. It's a simple realization that I want to have some legacy that's beyond just money, right? And to create outsized returns by doing the right thing. But I think a lot of it, Ryan, just starts with what you just said. It's just like this, I want to do something a little different. It doesn't have to be radical. You don't have to radically change everything. But when you go in with that intention, it makes a big difference. I'm going to tell you a quick funny story that we can end this.
All right.
So I was really good in my 30s and 40s. I'd say I was a pretty good networker. I could size up a room. I'd say that one of my strengths was I could network a room pretty good, not waste time, figure out who to go to, and all that stuff. And it was effective. So I had a funny moment. So like you, I feel like I think it's a constant evolution of our objectives. And I think that the nonprofit side, making sure those residents are recognized as human beings, is what's starting to turn me on the most, because I know my investors will get great returns as long as we're taking care of the residents. Mm-hmm. And that's definitely my thing. But as I'm on these panels and I'm like flying places, I go back a little back into like goal mode, right? A little bit in that more transactional mode. So I'm sitting there last week. It was actually this week. I was sitting at this panel and I was like, everything was being jammed in. You had like high-powered people, like all these things. And then the guy right at the table next to me starts to cry. He's weeping. And like, I was a little bit in my business head, like, oh, I'm here to network and do this stuff. And the host kept saying, make sure even when you go to the bathroom that you're networking, your best next deal might be in the bathroom, So I walked out and the guy, I said, are you okay? Are you okay? Like, what's going on? And I don't know what it was. He just started weeping. He hugged me, wouldn't let go, and wept for 30 minutes.
And did you know this person?
No. So now I'm in a mastermind, and this person I've never met is just weeping in my arms. And okay, first of all, you don't look cool when someone's weeping in your arms. And he's talking about his childhood, and he's talking about some really rough things that had happened to him. And it was in that moment, Ryan, where I realized like, part of me was almost like a comedy in my head. It could have been like a Seinfeld episode or like Curb Your Enthusiasm. I'm like, what happened? The next thing I know, an hour has gone by. I'm having lunch with this guy and he's telling me everything. And I'm like, I think I'm at a networking thing. But then I realized at that moment that when you talk, like when I'm talking about, and it makes me get welled up with emotion about those residents, he's a resident. You know why he's a resident? Because he's a human being. And really what this is about is recognizing, taking responsibility and recognizing, paying it forward to other human beings. So even in the middle of a mastermind, which my brain's like, am I wasting time? Like it took me a minute to calm my own old style down to say, you are just here to serve. Yeah. And ironically, guess what? This is your purpose. This is exactly why you're here. Business and life, and Ryan, you and I keep talking on this, business and life are the same. Sunday and Monday are the same. Whatever needs to happen in that moment, it may not be what my agenda and my brain says, but it's exactly what needs to happen in the moment. And when you make those declarations of who you are and why you are, the universe is going to respond. So why was I that guy in the room? Because I was the perfect guy to have that conversation with him.
I have nothing to add.
Yeah.
Thanks for challenging me and a lot of people on this one, JP.
Yes. And
this
then
is good.
As my son would say, deuces.